We will discuss two topics: Senior Citizens Card benefits and tax benefits for senior citizens in Income Tax Act 1961. Criteria to apply for Senior Citizens Card: people above 60 years of age can apply, and people who are resident in India can apply. That is, NRI or non-resident cannot apply for Senior Citizens Card. Now let us see the documents to be submitted. For identity proof, anyone, Aadhaar card, voter ID, passport, driving license, ration card, pension card, government issued photo identity card, or bank certificate from bank branch. For address proof, anyone, that is passport, telephone bill, Aadhaar card, ration card, voter identity card, rental agreement, registered sale deed, passbook of your bank account with your photo. And for age proof, anyone, birth certificate, passport, PAN card, or school leaving certificate. Now let us see how to apply for Senior Citizens Card. The applicant may apply for Senior Citizens Card by filling up the details in an online form available in the official website of each state. You can log in to services.india.gov.in, and in the search option you can type the state name. That is, if you are staying in Maharashtra, you can type Maharashtra Senior Citizens Card in the search option. The applicant has to register and submit the application form along with 2 photographs and a copy of identity proof, address proof, and the age proof document. Followed by this, the applicant may proceed with the registration process. Every applicant who has submitted the required documents and has completed the registration process will receive the Senior Citizens Identity Card after the approval of the application and verification of documents by the competent authority. Now let us see the benefits of Senior Citizens Card. A 40 to 50% railway concession on tickets by Indian Railways. Dedicated counters will be available at railway station. A 50% discount on air travel offered by selected airlines. Discount at multiple private hospitals for a minimum age of 60 years. Government hospitals provide free treatment for 60 years old or older people. Bank provide an additional interest of 0.5% on FDs for 60-year-olds. The High Court provides priority hearing for anyone above the age of 65. Professional tax exempts senior citizens, that is 65 years and above, from paying any tax. Telephone provides a 25% discount on monthly rental to 65-year-olds. Now let us see the tax benefits for senior citizens as per Income Tax Act 1961, our second topic of discussion. We will start with the income slabs. For individuals below 60 years, tax up to 2,50,000 is nil. Above 2,50,000 up to 5 lakhs it is 5%. Above 5 lakhs up to 10 lakhs it is 20%, and above 10 lakhs it is 30%. For senior citizens, that is individuals from 60 to 80 years, up to 3 lakhs it is nil. Above 3 lakhs till 5 lakhs it is 5%. Above 5 lakhs up to 10 lakhs it is 20%, and above 10 lakhs it is 30%. For super senior citizens, that is individuals above 80 years, up to 5 lakhs tax is nil. Above 5 lakhs up to 10 lakhs is 20%, and above 10 lakhs it is 30%. So if you go to see, for senior citizens of 60 years to 80 years, there is a savings in tax of 2,500 rupees compared to the individuals who are below 60 years, whereas in the case of super senior citizens, that is above 80 years, the savings in tax is rupees 12,500 compared to the normal individuals who are below 60 years. Benefits under medical insurance covered in Section 80D of the Income Tax Act. A deduction allowed under Section 80D is rupees 25,000 for self and family below 60 years in a financial year. In the case of senior citizens, the deduction allowed will be double, that is rupees 50,000. Privilege on interest income. This is covered in Section 80 TTB of the Income Tax Act. Senior citizens who are residents of India will have to pay no tax on their interest earned in the savings bank account, fixed deposits in a bank and deposits in the post office up to rupees 50,000 in a financial year. This limit is rupees 10,000 for non-senior citizens under section 80 TTA. Also, section 194A provides senior citizens with a benefit of a higher TDS reduction on interest payments of up to rupees 50,000 by a bank, post office or cooperative bank. This limit is rupees 40,000 for non-senior citizens. Exemption from filing ITR. This is given in section 194P of the Income Tax Act. Budget 2021 has introduced a section 194P under which senior citizens aged 75 and above are exempted from filing ITR if they fulfill the following conditions. They have income only from their pension, they receive income from interest and pension in the same bank account, and they have furnished a declaration form 12 BBA to the bank. No advance tax. This is given in section 209 of the Income Tax Act. While individuals below the age of 60 have to pay an advance tax if their tax liability is rupees 10,000 or more in a financial year, senior citizens are free from this burden unless they make income from business or profession. Allowance for treatment of specified diseases, which is covered in section 80 DDB of Income Tax Act. Individual taxpayers and dependent relatives below the age of 60 years shall get a deduction for medical treatment costs up to rupees 40,000 for specified diseases. For dependent senior and super senior citizens, this reduction limit is up to rupees 1 lakh if they undertake any treatment for specified disease or critical illness in financial year. Now, specified diseases are given in Rule 11 DD, which covers diseases or ailments like neurological diseases, malignant cancers, AIDS, chronic renal failure or hemophilia. Income tax return benefits. Super senior citizens, that is individuals above 80 years, can file for their income tax returns through either ITR 1 or form ITR 4. They can choose to do it either manually or electronically. Standard deductions from pension income. Senior citizens are allowed a standard deduction of rupees 50,000 for their pension income. Thank you. If you like the video, please click on the like button and subscribe to my YouTube channel.